Welcome back to the Brent Bruce Daily. Today is October the 17th, 2022. It is now 3:41 p.m. Central Time, and what a weekend I had. A few weeks ago, I decided to take my son for his birthday and got tickets to go see Tennessee versus Alabama in Knoxville. And man, it turned out to be one of the greatest games in college football history. We were actually there, sitting in the stands when they kicked that field goal and it went through, and it just was pandemonium that just broke out. And I didn't even know what I was in for. But of course, if you watched any news at all, you saw that the field got stormed by the crowd. They tore down the goalposts and they threw them into the Tennessee River, which I guess is an age-old tradition. It was an amazing time. But I'll tell you what. That was a fight every play. I mean, it felt like every play was the last play of the game. And it truly was a fight for hours. Pretty much lost my voice. I'm now a Tennessee Volunteers fan. How could I not after they definitely earned my vote? But that is kind of interesting because it seems like that's what we're experiencing here in the home loan world on a daily basis as well. That, we really are fighting every day like a defensive line, trying to not let that 7.0% be the interest rate on our 30-year fixed. So let's take a look and see where we are. We're up 27 basis points on the day, which is good. Continuing to fight to improve. Our 10-year treasury, unfortunately, our 10-year bill is above 4% right now. And we do not want it to stop there. We do not want the day to end over 4%, because otherwise that becomes a strong floor of support, or a floor that would have to be broken before we would start to see that 10-year improve. So we don't really want to see that. You can see that we are staying in this range here on the mortgage-backed security, hopefully going up here. But man, we have a lot of ceilings to break through before we get back into the range where we really want to be, which would be in the upper fours, lower fives, which is, I think that's a realistic place for us to hope to get to. So how does that look as far as our Brent Bruce Daily interest rates? Let's take a look at our scenario here. Remember, we were about 6.875, 6.99 last week is where we ended off. So we're having a pretty good day here. Hopefully we have a little bit of improvement. And what do we have? Okay, we're at 6.999 still with a little bit of a credit coming back. How much would it take for us to buy a 6.875? $407. So realistically, $407 is, I'd probably be offering a 6.875 and telling the client, look, for $407, it makes sense to buy that 0.125% better than the 6.999. So we are continuing to fight, continuing to stay below that 7%. You can see, if you watch this day after day after day, how much the banks are trying to stay under 7%. How much the banks that I work with are trying to stay under that 7%, because it seems like that just keeps on that ceiling. They just do not want to break above it. Here's our scenario that we've been looking at here. And we are going to continue to see what comes out with some reports this week here on housing, builder confidence, things like that will be what we'll be kind of paying attention to, and watching the technical signals. Definitely trying to see what comes out here especially in November when it comes to inflation readings, because we are truly anticipating that inflation will begin to subside on our PCE and CPI numbers, at least on a year-over-year basis. So we will see how it goes. I will keep you posted. We will talk to you again tomorrow. Make sure that you like, subscribe, and share, and I'll see you then.